Hi, Gaurav and Sashank. Thank you so much for joining us today. FinStep Asia and MEDICI have been conducting the leadership during COVID-19 series, and we would love to hear more about how Capital Float has been handling the situation. I know it's been only 3 weeks in India and it's been extended, so we look forward to hearing your thoughts for our viewers and taking this forward. To begin with, could either of you give an introduction to Capital Float for our global audience and what you do and the growth journey you've had in the last few years?
Sure, happy to do that. First of all, thanks a lot for having us on this edition. It's a pleasure to be here. Just in a nutshell, we started Capital Float about over 6 years ago with the vision of really creating a platform that could do small credit really well in India using technology. We initially started out with a focus on the small and medium enterprise segment and providing working capital financing to them in a seamless and quick manner. Over the years, we diversified into consumer financing as well, and today we run a diversified retail lending platform across both SME and consumer. The focus is really on two things. The first is being able to provide accessibility to financing. So we specifically try to target our services and products to borrowers who have had a hard time accessing traditional financing but are deserving of credit. This could be on the business side or on the personal side as well. And the second focus area is really on experience. So trying to make the process of applying for financing and also using that financing as simple and intuitive and user-friendly as possible, which means full transparency around charges, a few clicks to be able to get a loan, few clicks to be able to use that money, whether it's for a purchase online or offline or for internal working capital needs, etc. So that's who we are in a nutshell. Headquartered in Bangalore, but lend across over 300 cities in India. We've disbursed about $1.2 billion till date to about 500,000 customers all across the country, and just getting started.
Right. My question to both of you, Gaurav and Sashank, is that you have seen, you're the pioneers of digital lending in India, and the sector itself has seen so many of the issues in the past, right? Starting with eKYC, then ILFS crisis that affected the entire NBFC sector, coronavirus, and so many things around MDR, so on and so forth. Like every week, it seems like digital lending NBFCs have to kind of think about how to solve these issues and what is coming next. There's so much of fear and panic and fatigue in this. So how are you coping with all this? What do you think will happen? What are the right measures to be taken as a firm like yours?
Sure. So I think, Amit, you brought up a very valid point, right? That the industry, per se, for the last year and a half, has been obviously going through a lot of challenges, whether it's eKYC, liquidity of the ILFS, etc., right? But I think what that has actually become, or what's that enabled us to do, for example, is because we were kind of living in a difficult time, in some ways we were more well prepared for when this crisis kind of has hit us, right? And obviously we can all agree that this is far worse, or rather far bigger a crisis than what anyone has seen for the last 12 months. So I think as soon as we started seeing this coming away, end Feb, early March, we got into very kind of a war zone mode, if I will. And we did a few things, right? So first was really around employee safety and health. So even before the Prime Minister kind of announced work from home, we had everyone actually 100% work from home with all infrastructure set up. Even a week before, we did a lot of testing. So very seamless shift to have all our about 500 people working from home, including call center, etc. Right. The second thing is to ensure employees were kind of comfortable and really didn't have to worry about day-to-day stuff. We made sure we did things like early salary payment for March, even before the lockdown hit. All our employees and their dependents are covered under a specific COVID insurance from a health perspective, right? So we did everything we could to have our people kind of rest in peace and actually work in peace and not to worry about the health pandemic that was kind of looming around, right? The second thing that we did once we were kind of confident of the health and safety aspect of all our people was we developed a playbook. Like I said, having seen the last year and a half, we developed a playbook that kind of focused on 3 or 4 things. One was, how do you kind of ensure liquidity and cash flow is sufficient and you're in a good spot at a time like this, right? And this is something that we've been doing for the last 1 year, where we not only keep enough cash buffers and we be able to build up those buffers, and how do we ensure those buffers actually stay in place. Two, how do you kind of look at cost and obviously kind of stop any extra kind of cost outlays that are not warranted at this point in time. Third, how do you look at risk, both in terms of your ongoing book as well as kind of build up capacities for collections, so that if things kind of open up at a point in time later on, you're actually prepared for that. And fourth, and maybe Shashank will talk a little bit about this later, is while a lot of the first 3-4 items are defensive and making sure the business is sound and stable and weathers the storm over the next 6 to 9 months, it's also an opportunity for us to kind of be offensive at this point in time. So we've come up with interesting product features that we will be rolling out. Some of it have already been rolled out. But how do you really think through and double down on certain aspects of the business that can become long-term assets, and really use this period of time when it's a little peaceful to actually build out something amazing that can become a great moat for the business over the next 2 to 3 years.
Mhm. So I just want to kind of, for the benefit of the audience, just want you to describe what's happening in terms of the macro and micro, economics. So for example, consumption is down, physical retail outside of groceries, essentials is completely wiped out. Online activity is happening, but some of the some of the high ticket items like electronics, mobile phones, I don't know if people are buying or not. So what happens in this situation for loans? Does it go down drastically, or are there segments that pick up and there are some segments which go down?
Yeah, it's an interesting question, Amit. And I think to some extent in India, we are flying solo vis-a-vis the rest of the world, because we actually have the most comprehensive lockdown compared to any other country, right? So there are very few comps to look at. At least what we are seeing in our sort of neck of the woods is that obviously the majority of economic activity is really ground to a halt, right? And it's countrywide. Obviously, some pockets continue to operate. So essential services, let's say the agri supply chain, in the healthcare supply chain, continue to operate. Last mile services, as you mentioned, e-commerce continues to operate. So actually one of the programs for us that is kind of seeing continued use is our partnership with Amazon, where we provide a line of credit for purchases. Historically, that's been used to purchase a very wide variety of things. But in the last few weeks, it's been primarily focused on being able to purchase essentials like gloves, masks, grocery, etc. on Amazon. But beyond these, I would say we're actually seeing a pretty comprehensive slowdown of, not even a slowdown, shutdown of most major sections of the economy, right? So I think as a lender, to some extent, we are kind of have a second order linkage to the real economy, right? We lend to people who then participate in selling and producing goods and services. So from that perspective, honestly, we are in wait and watch mode. I think during this lockdown period, I think the right thing for us to do was to pare down our disbursals quite significantly, both from a cash flow conservation perspective, as what Gaurav talked about, but also from a prudence perspective. So as I said, we are kind of funding some purchases of essential products online through e-commerce, etc. Looking at some businesses in some of these essential services on a case-by-case basis. But fundamentally, I think things are quite slow from a lending perspective, not just at capital float, but across the sector. I think the key question now on everyone's mind is really, what does the shape of the recovery look like post-lockdown? And I think the way in which the economy is opened up, whether it's a geographic axis or an industry axis, is really going to determine which sectors start to come back to life, and correspondingly where the flow of credit needs to start moving.
Right. They also say, one very controversial gentleman once said that never waste a good crisis. And, there are many companies who are thinking outside the box about new products and services which might appeal, under this scenario. Is there something that you can kind of, talk about? Because, I think, Gaurav, you mentioned about some of the things that you may be launching, but is there something that you can talk about already?
Yeah, sure. So there are three things that we've already kind of launched, right? One is really around on the Walnut app. The first thing that we launched was health insurance, both COVID and regular health insurance for all our users. So as you know, Walnut is primarily a personal finance management budgeting app that we actually started giving loans on a couple of years ago. But the insurance was the first product, non-credit product, that we launched literally about 2 weeks ago. So I think that's a big kind of first foray for us into non-credit products. The second, again on the Walnut app, is we were able to launch find a grocery store near you. So given the data sets that we have, we were able to launch in real time and tell people that, there's this grocery store next to your house that has these products, right? And that becomes a very useful tool for people to actually figure out how and when to actually figure out the needs for the essential supplies. Now, not necessarily a financial services product, but this is something that you kind of do obviously because we're able to have enough of user trust information and data, and we are able to actually repurpose that in a manner that can become useful to our kind of customers. The third that we are doing is, like Shashank mentioned, which is an existing product that's been repurposed, is what we do on Amazon. Is typically we used to earlier give little larger lines for EMI purchases of electronic goods or white goods. That has been repurposed to a smaller line for essentials, and people have actually been using that fairly frequently to whatever extent is available, goods available on Amazon. There are a few more that will be coming down the pike soon, but we will kind of obviously update you once we are close to launching some of those. But the idea is very clear that yes, this is a crisis, but you rightly said there is an opportunity to obviously rethink how some of our businesses run and how products are run, and how do we uniquely position ourselves to actually take advantage in some ways of the economy when it starts to return.
Now that's a very, very comprehensive look at how you guys have gone from being proactive for your BCP to actually looking at how you can run BAU, and then looking at launching new products, not just for your core product, but also for your newer company products, right? Now, one of the main things we want to ask you both is, as leaders of this organization, you have, people all across the country working for you. I mean, headquartered in Bangalore, of course, but how are you managing from a leadership perspective? What have you changed in your management style? How do the two of you communicate more? Because you can't meet, right? It's a lot more of Zoom and calls, right? So how's that been from a management and leadership perspective? What has been your approach, and what changes have you made?
Yeah, it's quite an interesting question, actually, because I think much of obviously the work that used to happen was in the office, right? So Gaurav and I would kind of sit next to each other, exchange ideas, etc. So I think it's a bit of a trivial example, but I think one of the things that we both do quite religiously now is a Zoom call, first thing in the morning, just to kind of sync up on the day's priorities, and then that's something we do with our kind of next level as well. I think one of the key kind of things that has worked over the last few weeks is maintaining a routine, honestly, both personally and professionally. And I think once those routines kind of came into place during the first few days of lockdown, the fact that many of them were virtual didn't really matter. And I think people kind of started to have certain checkpoints to look forward to. And I think the other thing that I think we've tried to do is create those unstructured interactions that typically happen in the office and lead to serendipitous discoveries, ideas, etc. So we generally try to catch up even with our exec team on a fairly regular basis. And part of it is kind of structured, going through a tracker, going through our playbook. But part of it is just brainstorming and kicking around ideas, because that's something that you lose, or you can lose when you move to a work from home setting. So I think for us, it's really been around kind of setting routines, creating kind of the right check-ins and checkpoints for our team. That's point number one. I think the second thing has been around just communicating. So one of our big learnings from the last crisis that we dealt with around ILFS, etc., was we didn't communicate enough of what was really happening both inside and outside to the broader base of employees in the company. And that's something we really took to heart. And so over the last couple of weeks, I think we've tried to be very rigorous about being extremely open and transparent with the team on what we've been doing. So for example, we did our first Zoom town hall last week with literally almost 550 people.
Nice.
Had question and answer at the end as well. We do, for example, kind of check-ins almost every week or every other week with our board to keep them appraised of what's happening. Similarly, we do a check-in with the top 50 people in the company on a weekly basis, so they know exactly how we're thinking and how things are progressing. So just communication, both internally and externally, with all stakeholders, whether it's your board, your team, your your debt providers has been a big learning. And thirdly, just kind of having some fun, right? One of the things you do lose in a virtual setting is that sense of camaraderie that is very important to early stage companies, right? Or rather growth stage companies. And so we've tried to do things like kind of involve the family, have some interesting challenges for folks at home to share their best desk or come up with a new version of the CF logo, part of some fun challenges and actually kind of do contests and prizes around that, do happy hours and lunch hours and coffee breaks over Zoom. Because I think at times like this, the team really needs to pull together as a family and feel secure. And so some of these activities have been quite important to creating that sense of cohesion.
Maybe the last one, just before we close, is how have you been dealing with your major investors, right, at these crises? How have they, what has their leadership been for you guys from an interaction, etc. perspective?
Yeah, I think, in one word, it's been very, very supportive. In fact, we were lucky enough, as you may have sort of seen in the news a couple of days ago, that we were able to close an existing round of funding from our existing investors. So at a time like this, that makes it all the more kind of critical. As Shashank said, we kind of do almost a board call every 7 to 10 days, and obviously they kind of tell us what's happening at a macro level if they have any information from kind of the time. I think secondly, all of them kind of check in with us on a regular basis, whether it's on WhatsApp or email, as to how we are doing, because obviously this is a tough time. But I think the great thing is it's always easy to kind of contact them, but it's actually been much easier. Hey, pick up the phone and say, hey, you know what, I need this right now. Can you help me out with this? And you get a response in a matter of minutes in most cases.
Yeah, that's cool.
And we would love to talk to you for much longer, but we want to keep it a quick, short format so that people get to enjoy this. The attention span is quite short these days. One very, very quick question for you guys, and then one piece of information that we want to share. I'll do both of them in one shot. So the quick question is that governments and regulators around the world are doing something for companies in general, or fintech companies specifically. For example, in the US, I know from our US entity that there's a payroll program that has been rolled out. In Singapore, they are doing a $120,000 of thing for the fintech companies. If there was one thing that you wanted from regulators or government, what would that be?
I would say credit transmission. As the lockdown gets lifted, resuming the flow of credit to the last mile to SMEs and consumers is going to be the most critical thing for the economy to recover. This will need to be done digitally and not physically. And one of the things that other governments have started to do really well is actually enable fintech lenders to channel the flow of credit directly from the central bank in some cases, or the public sector banks, to the last mile. And in some cases, even create credit kind of guarantee schemes to enable this funding to flow faster. A digital loan is effectively a socially distanced loan and could actually be a game changer over the next few months for the economy to get back on its feet.
Right. Great. It was great talking to you guys. Thank you so much for your time. We have actually collected resumes of all the interns globally whose internship has been affected or has been cancelled. So we have a database of really good interns from all over the world, from some of the great universities. So if you guys are interested, we will share that with you offline if you want to hire a few interns.
Sure. Yeah, sure. Interns are always welcome.
Great. Thank you so much, both of you. Thanks,
Thanks, guys. Thank you so much.
Thank you.
Thank you.
Bye.